What's up, everybody? It's your boy Satt coming to you with today's stock pick, news, and indicator help. No face, just facts in 5. I do the research so you don't have to. Make sure you check out the new Stocks by Satt 06 live stream, where we keep a live feed running on some of the top stocks and indices in the market, plus a stock of the week. This week's stock of the week is SpaceX. Shout out to 11 Labs for making every video possible. Link in the description and profile. Let's dive in. Today we're breaking down the Lime IPO, ticker LIME, and asking the real question: is this a legitimate growth story, or is this just another flashy IPO? Lime is one of those companies everybody recognizes because you've probably seen the scooters and e-bikes around major cities. But when a company goes public, we have to get into the numbers, the business model, the growth story, and the risks. Lime is a shared micromobility company. In plain English, they rent out e-scooters and e-bikes for short trips around cities. According to the prospectus, Lime operates in about 230 cities across 29 countries and served around 19 million riders in 2025. So this is not a tiny concept company trying to prove demand exists. Lime already has real scale, real riders, and a recognizable global brand. Now let's talk about why this IPO needs attention. Lime's revenue grew from $522 million in 2023 to $686.6 million in 2024 to $886.7 million in 2025. Then in the first quarter of 2026, revenue came in at $170.2 million, up 32%. That means the top line growth is already happening. The question is whether that growth can turn into consistent profit for investors. Now let's talk about why investors might care. Lime says it is the largest global shared micromobility platform, and the filing points to strong market share across the countries where it operates. In a business like this, scale can be a real advantage. More vehicles, more riders, better city relationships, and better route data can help the company operate more efficiently. Lime also has an important Uber partnership where Lime vehicles show up inside the Uber app in many shared markets. That gives Lime distribution without having to convince every rider to download a separate app first. And the bigger theme here is urban transportation. Cities are crowded, parking is expensive, and people still need short distance options. But now we need the financial reality check. Lime has scale, but it is not risk-free. In 2025, Lime reported a gross margin of 39% and adjusted EBITDA of $218.1 million. That shows the business has operating leverage and is not burning money without progress. But on a GAAP basis, Lime still reported a net loss of $59.3 million in 2025 and a net loss of $61.3 million in the first quarter of 2026. That is the balance investors have to understand. The growth is real. The economics are improving. But this is still not a clean, consistently profitable company yet. Now let's talk about the IPO itself. Lime expects the IPO price range to be between $24 and $26 per share, and it plans to list on Nasdaq under the ticker LIME. The company is selling about 6.68 million shares, and the filing says $115 million of the proceeds are expected to repay a term loan. That is important because some of this IPO money is not just going toward growth. A major piece is going toward cleaning up debt. There is also an interesting Uber angle here because Uber indicated interest in buying up to $20 million of shares in the offering. That does not guarantee anything, but it does show Uber still matters inside the Lime story. Now let's talk bullish reasons versus risks. On the bullish side, Lime has fast revenue growth. It is a market leader in micromobility. It has an Uber partnership that can expand reach, and the company is showing improving operating leverage. Those are real positives. But on the risk side, Lime is still losing money. The business depends heavily on city permits and regulations. The debt load remains meaningful, and weather can impact demand. If it rains, snows, gets too cold, or cities tighten rules, that can hurt usage. So this is not just a simple green transportation stock goes up story. Investors need to respect the real-world operating risk. Here's Satt's take. Lime is a real story, but not risk-free. I'm rating this a 7.5 out of 10 IPO. I like the growth story. I like the urban mobility theme. I like that the company has real revenue, real riders, and real scale. But I do not love that it is still losing money, depends heavily on permits, and is using a major piece of IPO proceeds to repay debt. So for me, this is not a blind buy. This is a watch list IPO. I want to see how the market prices it, how it trades after the debut, whether revenue keeps growing, and whether the company can move closer to real profitability. Remember, I'm not a financial advisor, and this is not financial advice. Do your own research, manage your own risk, and never invest what you can't lose. If this breakdown helped you, smash that like button, subscribe, and drop a comment with the next IPO, stock, or market story you want me to cover. This is Satt with Stocks by Satt 06. No face, just facts in 5. Keep learning, keep investing, keep building. Peace.